All right, everybody, welcome back to the Cashflow Chronicles. We're here with Mr. Patel, September 30th, 2024. As always, contemplate becoming a subscriber so you can participate in the chat. Pretty decent day in the markets. Some things up, some things down, but Apple up to 233, Amazon 186, Dutch Bros hanging out at $32, Google hanging out in the mid 160s, Palantir, believe it or not, closed above $37 again today. SPY hanging out at all-time highs, 573. The Q's 488. Bitcoin pulling back a little bit at $63,500. WTI oil prices still below $70. And Henry Hub gas slightly propped up to $2.90. Mr. Patel, no hat today. What's going on?
I can't find it. I don't know where it is. Like I was looking for it right before we got on and I just couldn't find it. I don't know where I put it. So my wife washed it. Give me 1 second. I'll be right back.
The boss lady, man, she's taking matters into her own hands, making sure that hubby does not smell while he's podcasting. Well, hopefully everyone is having a great time today. What I do want to talk about, Chris is a big proponent of Carnival Cruise Lines, and they reported today. And so I know he was able to get on the market open with a MIT earlier this morning and have a good conversation about it. Record revenues, if I'm not mistaken. But at the end of the day, what I do want to make sure we hear from is the man, the myth, the legend himself. And I'm particularly curious about, and I'll have to reiterate this when he gets back, I'm particularly curious about, now that we know that bond yields are actually going to be a little bit stickier, at least for the current month, it looks like it's going to be stickier. Curious what Mr. Patel has to say and if it changes his thesis at all. But yes, I do see some folks chatting about the China trade. I also wanted FXI to pump. Chris promised me a Lambo by investing in FXI, and I have yet to get Lambo. So overall, there's a lot of broken promises, obviously, because Chris isn't even at his desk.
I got it.
Did you hear everything I was talking trash about?
Not really. It cut out for a little bit.
No, you're good. So basically, I just wanted to get your 2 cents on Carnival. We don't necessarily have to do the full hour, but I did want to get you on. I heard you on Amit's live morning open this morning. I'm also curious about the thesis about refinancing, because I think that that's a stickier place than what you and I might have been thinking about a month or two ago when you started bringing up Carnival, and you've been talking about Carnival for quite some time. But really, over the past month or so, you've been pushing it pretty heavily. And with the stickiness that we're kind of seeing with respect to the 10-year and things of the like, it might not necessarily go as quickly as maybe once thought. So I'm curious about your thoughts on that and just overall the quarter on its own. I didn't look at it, but I did hear you talking about it. So I know it's record revenues, and I'll open the floor to anything else that you want to say.
Yeah, so one of the challenges that we're kind of still in the middle of right now is where does that 10-year end up going, right? So a lot of what we're going to see in terms of like interest payments going to the future is where does that 10-year end up? So if the 10-year ends up at a higher place than what we're kind of assuming, then we have to take that into consideration when it comes to the long-term value of some of these companies, not only from a multiple expansion point, because the way that it works is as interest rates are lower, the higher multiples you're more comfortable paying with, right? So if you're only getting maybe 1 or 2% on the treasuries, then you're more than likely to buy something, even if it's let's say a 20 multiple, versus if it's something like 4, maybe 5% on the 10-year, then the multiple should be scaled back to maybe between 12 and 15 for being a fair market value. So, so unfortunately, with the movements in the 10-year in the direction higher, just means that the future multiple that you want to give to certain industries could be a little bit more, a little bit more conservative. So I still say the long-term prospects for Carnival are very healthy. They're still growing their top line and bottom line significantly, and they're reducing down their debt, which means that a lot more of that debt servicing cost ends up coming back to shareholders in the form of total return. So, this is not something that I would say dissuades me from investing in Carnival, but it does definitely put a little bit of a dampener on the total future stock value of the company based on today's data, right? Because all you can do is base your decisions based on today's data. Right now, you're starting to see, like I said, the 10-year kind of rise a little bit. I saw an interview with Jim Bianco today where basically he said the 10-year would eventually get back to about 4.5. I'm not so sure that that's likely to happen
That
unless
seems
we get.
real high, like four and a
Yeah,
half.
I mean, here's the thing. Something could happen in the economy. Like, look at this dock worker strike issue, right? If the dock workers go on strike for a prolonged period of time and we have a supply chain crisis like we did in 2022, by all means, we could see another bout of inflation come back again, right? So the question that we have to ask ourselves is, okay, like based on the data that we're seeing, how do we want to position ourselves from a risk standpoint? So I'm not selling out any of my position. That I still think this is a great business to be in, but let's just say I would. One, I actually hedged my position, so I took a lot of money off the table, which is always good. And I let people know that this is what I was planning on doing. So I was able to take some of that cash and now deploy it back into China, which are actually lowering interest rates, which means their multiple should expand, and they're already at a low. So China is a better target in the short to medium term than these guys are right this second. If we do get a pullback in Carnival, I want to make sure I have some dry powder to basically load up on the targets that I have. And I'll discuss the targets with the Patreon people. I know a ton of people that are up almost like 100% on some of their positions. With Norwegian, it's the same thing. But basically, the business itself is doing really well. So if you're one of those people that doesn't want to do the trading and they just want to buy the stock and hold it, by all means, I think this is a great value company. You're still looking at, the company growing its earnings, and then at the same time, it's what is that thing called? Adjusted EBITDA is also growing. So from an enterprise standpoint, it's getting better and better. So you look at their diluted earnings right there. Their guidance was for $1.15. That should end up coming out to $1.27. This is what you want to see, a continuous beating thing. The thing is, sometimes the market can get a little bit of ahead of itself in terms of like total valuation, in which case, you'll see this. I think today was a very telling sign that even though the market, especially early in the morning, it was down about 2, 3, 4%, it was able to come back to a more neutral thing. The market was expecting either a 10% move higher or a 10% move lower, and it didn't do either of them. So I think right now what we're seeing is maybe something of a floor being developed for 2025 around the $18 to $20 mark, in which case now further outperformance will see this thing jump to like the 25s and the 27s, like a lot of the analysts are saying. They also have a lot of catalysts that are coming up in 2025, but all those catalysts also have some unusual costs that are built into it. So I think majority of the benefit is likely to be seen in 2026, and 2025 might be a catch-up year. But in terms of like total stock return, I think we'll get like maybe like $4, maybe $5 from here additional for 2025, and then after that we'll have to look at earnings and then based our moves on that. So
yeah, and I want to say one thing. I'm with you. I think the thing that surprised me is I was looking at the 10-year personally and thinking that it was going to trend lower, closer to 3%, 2.5%, probably within the next 6 months to a year. And I guess I was caught off surprise, but I think that might just be my immaturity when it comes to cutting rates and not really having that experience. So in the future, I'll be more cognizant of that. And so all these things is always, a learning thing for everybody mostly. But it was nice to be able to kind of get that experience and have that. But I will say, Jeff Bezos is listening. I will say that the thing that Carnival had, and same thing with Norwegian, they were issuing debt in the midst of a pandemic at anywhere between 10% or plus, when literally 6 months to a year before, these guys were able to get pretty much prime prime credit, right? And so
Mm-hmm.
anything, even in today's environment, it doesn't even necessarily have to cut rates massively. They just need time,
Yeah.
because they are in a such better position from where they were 4 years ago, that they could just literally just refinance a lot of these things at even today's price. They don't even need rates to get that much better than what they are right now. And they're going to have massive amounts, hundreds of millions of dollars of additional net income going to the
Mm-hmm.
balance sheet. So I think,
Yeah.
I might have been, how do I say this? I might have been overexcited about rate cuts overall, and maybe I didn't take advantage of it enough from the latter half of 2023 to now. And I think that that was kind of my immaturity and kind of knowing what to expect. But even still, I think that you're going to have a perfectly fine time in companies like this, or other companies like Brookfield and a lot of other real estate companies, as rates have already started to come down pretty substantially over the past
Yeah.
year and a half. So anyway.
Yeah, and it's not just us. The entire world is starting to like start cut rates, and get back to some more normalization. The key that we have to basically contend with is the same thing that China is going through right now, which is an implosion in their property sector. If we see a similar property implosion in the US, which I don't think will happen like to the same degree, but if we do get weakness in the real estate market, especially like with single family housing and even some multifamily, and basically we see a leveling out of growth, then that could theoretically cause a reverse wealth effect, very similar to what's happening in China, in which case a lot of people might scale back on spending, which causes more deflation. And then that deflation could end up working its way into the general economy. There's a lot of other moving pieces, especially with the US consumer, that are not necessarily the like a perfect one-to-one example. Like as an example, like the Chinese, they're very, very underexposed to the stock market. Like if you look at most investors in China, they're nowhere near to the levels that we are here in the US. Like
They
I was
used to
actually,
be.
huh?
They used to be super leveraged, if you remember, a couple of years back. And that I think a lot of people took a lot of, or maybe I'm thinking of the Indian markets. I don't remember. It
No.
was,
It was definitely the Chinese markets. I still remember in 2014, 15, where
yeah,
you would
that's
have
when it
these
was.
old school grandpas. They would go to like their local like stock trading things and bet and watch the stocks go up and down, right? I think we could, believe it or not, I think we could end up in a very similar thing in China, because I think there's a rotation happening from wealth creation from primarily the property sector to now the equity side of things. So if you look at like total wealth, you know, yes, you can build wealth in real estate, and that's always a good thing. But then also there's other ways to build wealth. Like for you right now, you've got a portfolio of assets that are real estate based, and then you also have a portfolio of assets that are stock based, right? And
Mhm.
so I think as an investor, you kind of want that diversification. And I think the Chinese are starting to kind of realize that we can't have majority of the population be invested in one asset class for future growth. Like we need to make sure that we have a diversified economy where people have ownership stakes in the local companies, and then we also have to make sure that those local companies are thriving so that the consumer is like, it's almost like the cycle that feeds itself, right? Like that's the one of the benefits here that we have in the US, and we're very blessed to have it, is that we have a strong stock market and we have a strong consumer base. So it's almost like consumers, they work, they take their money, they pile it into some of their retirements, they put some of it into stocks, and that money grows. They feel the wealth effect. They go out and they spend money, which reinforces those companies to do more, right?
Yeah.
And they end up doing better. And then if they do better, then it kind of like helps support the people at the ground level, and it just kind of like keeps going from there, right? So it's like this nice little circle. And the thing is, our capital markets are for the most part efficient enough so that to the point where people are not losing money over a long period of time. Like if you look at Japan, Japan has stock market decline for like 15 years, right? We had a nice strong stock market the entire time, especially after a great financial crisis. And that helped build a lot of people's fortunes, but that also helped bring a lot of consumer confidence to the markets as well. So I think if my investing thesis is very simple. The Chinese are trying to do a very US centric model where they're going to be propping up part of their property sector to basically stabilize that reverse wealth effect, which is what you're seeing in some of the policy decisions, but then also kind of get the general public to be a little bit more aggressive with their allocation of additional money towards the equity markets in their home areas, so that this way that capital can be reinvested back into the economy, back into, more job creation, and especially at the lower levels, and basically launch like a nice vertical move in the Chinese economy. So whether or not the Chinese government is actually going to succeed in that, it's anyone's guess. But for me, when I look at the stimulus measures that they've come up with, it's telling me that they are going gangbusters and trying to create a floor under their equity markets, but then also get some level of expansion higher, and the way that they want to phrase, the way they want to do it is that they want to kind of internally develop a economy that's a robust economy. Like, one of the things that China's been very good at over the last like 20-30 years is that, it's been an export driven economy, right? I mean, it's clear as day. Like, you get foreign direct investment, you build the factories churn out products that get sold overseas. The money that comes in, they take that money, buy US treasuries and lower the price of treasuries. And so more consumers have access to credit and they buy more shit. And it's been working for them, and they reinvest some of that money back into their infrastructure, make the people's lives a little bit better by having better roads and transportation systems. If you look at Chinese cities, man, they're beautiful. Like, they're absolutely
very beautiful,
amazing. The problem, though, is that just because you have a beautiful road and a beautiful train system, that doesn't mean that the people are necessarily going to spend that money on goods and services. And the thing is, with the US being more heavy-handed with their tariffs, and also now the Europeans and a lot of these other countries, you're starting to see this trend towards deglobalization. And because of that deglobalization, now the Chinese are stuck with all these factories that are producing, but they just don't have the markets to sell into. So the question now is like, what do we do with this excess capacity? Well, one of the things you could do is just build out a nice, strong local economy with 1.4 billion people, and basically have those factories churning out products that you can locally consume, and then take excess of that and spend it overseas. So I'd say this is a time where they're redefining their future right now, and I think if they play it right, they'll do okay. It's not something that I'm like, oh my God, like China's like the next big thing, like invest in it for the next 20 years. But I think that right now, with the way that the valuations are set and all the stimulus measures, we could see it go back to more fair market value. And then also there's like another push from the local people to basically invest more in the markets, which means that you're probably going to see, a little bit of expansion on the multiples front. And so I think there's like a 50% move in the next couple of years in China, which is, to me, it's attractive. 50% in a couple of years, it's not a bad place. It's not a bad return. So
yeah, I mean, if you're thinking about the opposite, right? You're talking about the U.S. markets that are kind of richly valued from a multiple expansion. It might be a risk to reward that's worth considering. I haven't done enough due diligence to really understand the risk to reward off of it. But it's possible. I mean, I could definitely see an opportunity, but I do hear what you're saying as well, right? Deglobalization has been something I've been acknowledging since 2022, since really the start of the Ukraine-Russia war. You start to see people take sides, right? And
yeah,
are you on the eastern side? Are you on the western side? India is trying to stay in the middle and not really play favorites, but at the same time, they're importing Russian oil, so they are kind of choosing a favorite. So you start to have some of these things happen that, like you stated, supply chains, right? We saw the massive jump in natural gas prices in 2022. We saw the big jump in oil prices in 2022. It wasn't that we were producing less oil or gas. It was just based off the supply chain disruptions. So a lot to be said about that. And, there's probably something after we take a quick 20-second break for our good intro that we always do. To talk a little bit about the strike that's happening almost imminently within the next 2 hours or so. Curious to get your thoughts on that. I have personally no real skin in the game associated with that, and don't really necessarily know too much, but I am kind of curious how that pulls forward, because that does have implications on inflation and things like that. I mean, just remember what happened during the pandemic. So we'll talk about that probably first, right after we have our intro. But before we do our intro, Mr. Seymour Duck, thank you for the one gifted. Much appreciated. We are now up to 15 members on the channel. So awesome for us. Mr. Patel, anything before we kick off the intro?
Greed is good.
The stock is going to go up, down, sideways, or in fucking circles. It's all a fugazi.
Sell it all.
Greed is good. Huge upside potential, upwards of $60,000.
All right. It is always a good day to be here with Mr. Patel.
You know, I shouldn't have rambled. I think we did the intro 20 minutes in because I was rambling. I just I thought about, I was like, wait a second. Maybe like the first 5 minutes we talk, and then not even 5, like the first 2 minutes, and then we do the intro.
You got to have a natural break. You got to have a natural break. And I felt like I didn't want to ruin your flow. You're on a pretty good flow. It's not like you were rambling and repeating yourself. You were saying new things every time that you kind of reiterated the point. So it wasn't bad. Don't think too poorly.
See, the thing is, like, that's how it is. Like, I'm like Eminem with the stock market, right? Like once I'm jamming and the flow is just coming, it's like boom, 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 boom. You know, you can't stop. So
sometimes you can't. But yeah, I'm not surprised that people are already lining up to buy paper towels and toilet paper. I'm actually kind of curious because I remember back in like 2021, people were always talking about the ships that were posted off the shore on the West Coast. And they were like forecasting if it's going to go up, down, sideways. I'm curious if we're going to see something comparable on the Eastern Seaboard. And do you know if it also involves the southern ports as well, or is it strictly the eastern?
Nah, it's all along from Texas all the way to the northeast.
Okay, man. There you go. Because Houston is one of the biggest ports in the world. So, shit, maybe I should go get some toilet paper after this live stream. That's probably MO number one. I need to get some toilet paper. And what else do I need, Chris?
I don't know, man. So what are things? Well, first of all, I don't know if toilet paper is the thing that you want to worry about. Like I don't think toilet paper gets imported. You know, I think we have plenty of paper products in the country, and we have like plenty of that. So toilet paper is probably not the thing to worry about. I'd say it's probably more like luxury European goods that would come in through the East Coast. Maybe cars.
What about basmati rice? Do I need to go get some basmati rice? Head over to Costco?
Bro. I don't know, man. Maybe that's the thing. Like, what are the major imports on the East Coast? You know, so those are the things you want to kind of like. Baby oil. That's right. No baby oil. Yeah.
Demand for baby oil, man. Gotta go way down. Yeah, I'm kind of curious. East Coast imports. I'm probably gonna get like cars, but I'm curious what are the big things that get imported into the East Coast? What are big items imported?
So you'd have to look at so you've got all the stuff that comes in from Africa. You've also got a ton of stuff that comes in from Latin America that's going to come through the East Coast in Europe. So Europeans are probably cars, machinery, heavy goods. That's probably what's going to be coming in from Africa. It's going to be, oh, there you go. Yeah. Machinery, fabricated steel, precision instruments. So that's where you're going to see stuff coming in from Europe. Apparel, footwear, accessories. So there you go. That's another one. Consumer goods, everyday goods like bananas. So food, right? So food is going to be definitely one of the ones that the fruits, edible oils. Yeah. So I would say instead of stocking up on toilet paper, maybe it's a good idea to buy some produce, but then produce is perishable. So I don't know.
Do you think?
I think you're a little loud on your
Am I? Sorry. Do you think that? I'm trying to think. I mean, I recognize that with this, you could go back up in terms of inflation numbers month over month, year over year. But do you think that with the impacts of this that it could actually have the opposite effect where they say, okay, unemployment goes up. You know, you have other things in the macroeconomic economy where when November time rolls around, it actually has the opposite of effect where everyone says, oh, you know, inflation is going up, you have to increase rates. But you have so many other things in the macro happening that it ends up being like, no, we need to cut rates faster. And so then you end up having the 10-year actually collapse a little bit. What do you think? What do you think the implications of this? Let's say it goes on for 4 weeks, 6 weeks.
I don't know, man. The problem isn't so much the time that it takes to basically when they strike, but it's getting the backlog cleared after the thing. So like the ball is really in the longshoreman's corner right now, where they basically can, you know, bring a halt to everything that's happening and basically cause some massive disruptions. And then to get rid of those disruptions is going to take even longer, right? Just to get those ships cleared out of the way. Because remember, it's a flowing system. So it's not like the ships that are already docked, they're going to be able to do anything with it. They're going to have to wait until those are unloaded. And then you have to wait until the next ones that are waiting get unloaded. And by that time, there's already new ships that are coming in, you know, that are also going to need to be unloaded. So it's going to take a while to clear the backlog. I wonder, though, if this is going to have the same level of impact as like the West Coast, because I know the West Coast got a lot more finished goods, right, from around the world. So the thing is, especially from China. So those finished goods from China ended up coming in through the West Coast. And so when the first supply chain crisis came, I think it was a lot more impactful in goods. But we'll see. I don't know, man. Hopefully they resolve all this stuff. So we'll see.
Yeah. I was good. So BD Tanner says, do you remember the air traffic controller strike in 1981? I don't, believe it or not. I wasn't alive. So I don't.
I wasn't alive either. So.
Really? You're 82, 83?
85.
85?
I'm not that old. Shit. Don't add to my birth, man.
Hey, man. No, I do not remember because I was not alive, but there you go. Yeah, there's plenty of strikes, and the world goes on, right? I think this will be just one of those things that captures the attention of the markets for a little bit, but I doubt it'll like.
See, the thing is, like we're in this just in time kind of like shipping model where basically goods and services are delivered right on time or close to being on time. So it's very efficient. There's no waste. But things like this, like I said, can cause a disruption. So I don't know. We'll see, man. I mean, this is where the markets, you can't predict things like this. You know, you can have a long-term bull case and basically it'll work out. But the reason why short-term people lose money in the stock market is because they always like let's say right now you bet on, I don't know, 2 month out contracts or 1 month out call contracts that expire in 1 month. And then something happens that's a lot more like, you know, local, not localized, but like short-term in nature. You could end up being right long-term, but lose in the short term because your time crippled. So this is where I'd say when things like this happen and things go really, really down, look for opportunities, find those opportunities, invest in them, and relax, you know. Lifetime bans on federal jobs.
Yeah, that's when he was talking about still the air traffic control strike. That's the big thing, man. Getting people lifetime bans on federal jobs. There's a lot of people that abuse the government employment system just to get a cushy job that they don't have to do all too much. So that's definitely something that I think a lot of people would.
But see, Tanner, one of the things is that I think the air traffic controllers were I think that was a federal job, so that literally the government had a lot more say in who could be fired and not, right? So it's not like right now, like all these longshoremen, they don't work for the government. You know what I mean? They're not federal employees. They work for private companies that own the docks. And I think the contest is among that. So it's almost like let's say right now the police go on strike. Can the police go on strike? Fuck no. The government would come in and be like, okay, all y'all motherfuckers are fired. Because the thing is, at that point, you're risking public safety, right? Same thing with all the firemen. Like, what if the firemen all went on strike? So it limits their ability to strike, in my opinion. It doesn't mean that they can't go on strike. It just limits their ability. Whereas these longshoremen, I think they have unlimited capacity to come in and just be like, you know what? We're going on strike. We're going to cripple you. And the thing is, the entire time you're going to end up facing this dilemma. And the other thing is, like, right now, that the way that the world is, I think it's a lot more favor towards staff than it is towards, like, just overall, like, the economy, right? So I think a lot of people are just saying, give them what they want,
Really?
Yeah. Yeah.
I think it's gotten better over the past 12 months or so, but I'd still say that the employees are still kind of looked like as a number right now. I mean, you're still getting people to be forced to go back to work. I still don't think that there's a lot of ease for employees like there was in 2020, 2021. No?
Say that again.
Maybe.
Say that again.
I don't think it's as easy for employees to do whatever the hell they want like they could in 2020, 2021. I mean, they're
Well, no. I mean, if you're an office worker that's like white collar, then you literally have zero like bargaining power, in my opinion. Like, for most companies, like, like Jenny, who basically gets coffee for everyone in the morning. If she goes on strike, big whoop, I'm going to get my own coffee. I was like, go ahead, Jenny, go on strike. Who gives a fuck? Versus, and the same thing with a lot of like middle managers. If they all go on strike, the companies will face a little bit of a headwind, but it's not going to end up crippling like the companies. Most of them can operate pretty efficiently without it. The question is, if you're in this critical role, then these strikes actually matter. So like I said, the longshoremen have leverage. Office workers, they don't have leverage. They can be replaced pretty quickly.
I thought you were talking about all employees. And yeah, I remember you saying now these particular employees. That makes more sense. Tanner did send this to me, so I do want to give it a play because I like how Ronald Reagan, I like his articulation of stuff. So
let me read the solemn oath taken by each of these employees, the sworn affidavit when they accepted their jobs. I am not participating in any strike against the government of the United States or any agency thereof, and I will not so participate while an employee of the government of the United States or any agency thereof. It is for this reason that I must tell those who fail to report for duty this morning they are in violation of the law, and if they do not report for work within 48 hours, they have forfeited their jobs and will be terminated. End of statement. Let me read.
That's pretty interesting. Do you think that the government will eventually step in? And if you think so, I mean, have you heard anything out of either side? I'm curious if this is going to be a topic of debate tomorrow at the vice president debate that we have on, what is it? It's not CNBC, is it? Doesn't matter, I guess, what news network, but what do you think the key topics are going to be tomorrow? And do you think it's going to be discussed?
I mean, short term, yeah, maybe like up and down. Let's see what happens with the strike. Like, I don't know what's happening. I'm not part of the negotiation, so I can't even figure.
What do you mean, Chris? You don't know something? You know everything.
Yeah, exactly. I don't know anything. But you know what? Instead of watching that from Reagan, I'll show you Lee Kuan Yew, who was the first prime minister of Singapore. He had a very similar thing to deal with, and watch what he did. Let me just share my screen. By the way, Lee Kuan Yew is like one of my favorite politicians to ever exist. Like, if you ever want, like, this guy literally is like he's the father of Singapore, but let me tell you, he set up the country for success. A little bit heavy-handed, don't get me wrong, but he did what he needed to do, get his country and to basically work. So here.
When I met the SIA pilots, I didn't meet them on TV. I met them face to face. So
SIA pilots is Singapore Airlines, basically. So the airline pilots were threatening to go on strike, basically. So this was his response.
5 feet across the table so they can see me and see whether I'm still vigorous, able to campaign and take them on, whether it's worth taking me on. And I offered them 2 choices. Either you argue, you stop this intimidation, which is what it was, bringing SIA right down, disrupting services, ruining its reputation, millions of dollars worth of advertisements and sales ruined within a matter of 2 weeks. It will take many, many months to repair the damage. And I said, gentlemen, and one of the captains on the committee is a founder member of Mr. Chiam's Singapore Democratic Party. And I knew it. He thought I didn't. But I first announced elections on Sunday, then I met them on Monday, so that they know I'm ready to meet them during elections. I gave them a choice. Continue this, and I will, by every means at my disposal, teach you and get the people of Singapore, help me teach you a lesson you won't forget. And I'm prepared to start all over again. Or stop it. Get back to work, restore discipline, then argue your case. Took them 65 minutes. They did as much talking as I did, a lot of them in answer to my questions. And they decided, okay, it isn't worth the fight. Why? Because they know they'll lose. They know that I'm prepared to ground the airline. They know that I can get the airline going again without them. And let there be no mistakes about this. Whoever governs Singapore must have that iron in him, or give it up. This is not a game of cards. This is your life and mine. I spent a whole lifetime building this. And as long as I'm in charge, nobody's going to knock it down.
So the point is that, you know, he had to do what he had to do. But here's a real question. I know a lot of people right now, they're saying, oh, 100%, like these longshoremen, they're asking for 100% in wage increases. So here's the thing. Have you done any research on what the longshoremen get paid right now?
No.
How much do you think they get paid per hour?
$40 an hour.
So close, but check this out. I don't know
what kind of I don't know what kind of benefits either. So
yeah. I don't know 100%, but this is what a longshoreman is getting paid right now. I mean, according to pay scale, I'm not sure how accurate that is, but when you start off at $20. After 4 years, you're about 24. After about 5 to 9 years, about 31, and after about 10 to 19 years, you're about $44, right, per hour. Here's the thing. This number right here, this 20, 24, 31. Even if you right now entered with that, the amount of costs that are associated in a lot of areas in the country, you can't even like basically survive. Okay. I'm sorry. That's just the reality. It's just how it is. Okay. $31 an hour in certain parts of the country is not going to work, especially on the East Coast where things are even more expensive than other like parts of the interior of the United States. So the question is, a lot of these people are probably not doing that great. So yeah, they're more than likely like, hey, look, we need higher base wages at the starting point. I mean, could you imagine yourself right now with all the costs that you have surviving with $20 an hour, Matt?
Well, I'm not trying to be rude, but that's why, you know, I went to school to not have to do jobs like that. I mean, it's tough. It's competitive, right? I mean, there's a lot of people, you know, I'm not saying it's an easy job. It's definitely physically laborious, but I mean,
look, in my opinion, and this is just me saying this, I think they should get a raise. 100%, probably not, you know, get to the point where, you know, you're able to make a livable wage. And the thing is, like, in the total grand scheme of like how much money this is actually going to cost a lot of these companies, it's not going to cost them like enough to the point where they're breaking everyone's back. You know, the problem is also, remember, Matt, me and you, we go to the office, we work a 9 to 5, we we're in relative comfort of the air conditioning. We're thinking more with our brain. Not that's fucked up to say. We're not thinking. They think with their brain too, of course. But we're doing more like mental energy related tasks. These guys are physically going out there and doing a lot of shit. They're also taking on a lot of hazardous risk when it comes to the shipping stuff. I mean, you have a shipping container fall on you, that's it, you're done with. So the amount of physical risk that they're taking on is significantly higher also, So I think a lot of longshoremen, I don't know that many, to be honest. My brother knows way more longshoremen because he lives in Savannah, and Savannah actually has a huge port. And the thing is, like, a lot of these guys, they're not like raking in the dough and they're not living these fancy lives like, they're making like six figures or anything like that. They're working their butts off to get what they are. And the thing is, like, as they get older, they are making more money. So I know longshoremen, it's one of those hustle jobs, right? Where there's a ton of opportunities for overtime. So anyone who really wants to like put in the effort will make more money. The problem is not everyone has the ability to kind of hustle,
Yeah.
And that's the thing. Like,
it's already very laborious. So, I mean, to take overtime is even more, right?
Yeah. Yeah. So, I mean, it'd be nice if we could actually have like a longshoreman. If anyone here in the chat is a longshoreman and you want to come on, you don't have to show your face. You could just discuss this. I'd love to just talk to someone and say, look, what are some of the concerns that you guys are undergoing right now? Is it something to deal with just pay, or is it something also to deal with automation? Because I don't know if you know this, but like, there's a heavy amount of automation that's coming to the ports. And that's something that's going to limit opportunities for a lot of people, which is something that if you look at one of the demands that I saw on there, it was like a complete stop to the level of automation. Yeah, right.
I mean, another thing as well that you don't necessarily get to take into consideration is the benefits, right? And benefits can be tens of, if not $20,000 a year, depending on how quality of benefits you get, right? So they could, I don't know, I doubt that they get pensions or anything of the like, but they could get 401k contributions. They could get other things that not necessarily gets included in that, but they might not also get things that most, let's say, laborious jobs would get. Like Buc-ee's, for example, which is a convenience store here in Texas, they pay $15 to $20 an hour, which is pretty good. It's a starting kind of convenience store level job. I anticipate many people in this chat that worked at McDonald's, like Kamala Harris. That's a joke, but worked at McDonald's probably started at $7 an hour, maybe even less, right? So in that respect, if you're starting off at Buc-ee's at $15 to $20 an hour, plus getting 401k contributions, plus getting paid vacation, etc., you might be sitting there like, this is a great gig. And same thing with Costco, right? Costco will start you off at $50,000 a year, but also give you really good quality benefits. And so with that, you get paid vacation, etc. It's not too tough. Maybe that's what they're fighting for. Maybe it's not necessarily the fact that they're getting the 20 to 25 an hour. It might be that there is no paid vacation. It might be that they don't get dental. I don't know.
No, check this out, man. I think this is something that probably scares them more than pay. I'm going to cut the volume because I don't know if that's going to get us demonetized. So.
Yeah, good point.
Yeah. So you can see here that, look at this. It's literally robots on all right, let's see. What am I doing? He's speaking Chinese. Like, I was going to say, let's listen to what he's saying. And I was like, wait a second. It's right there on the screen, But basically, you can see that the level of automation is actually really freaking strong, So a lot of these guys could end up losing their money. Losing their jobs, So, yeah. Everything is automated. The cranes, like, they pick up the thing by themselves. They drop it off on these containers, I mean, look at this guy. He looks super smart, bro. I trust him. Look at this. They're not even, this is the longshoreman of the future. Basically, it's a joystick. Oh, man. I mean, I'll be honest. This is kind of like safer, though, right? Instead of having to go out there and doing all that stuff. Oh, man. Okay. All right. Well, I'll stop this. I don't know. I don't want to.
I mean, it's potentially safer. It's potentially able to keep costs down as well. You don't necessarily know what the implications are. I mean, just because, for example, I mean, I know the oil industry, the amount of oil production continues to go up, but the amount of workers in the oil industry continues to go down. You think about it in that respect, the automations and computer programs and everything the like has been attacking the oil industry, but I still have a job. So I anticipate it's something that is going to be comparable. Not everything is going to get turned over all at once, but there's going to be parts of the automation that can't be done by robots or automation, right? There's always going to be some sort of person at some point that has to take control of some of the objects, right? And it's same thing with like last mile delivery, right? It's very difficult to be able to get everything down to the last mile. You'll still need that individual person, no matter how many shipyards you have, no matter how much in automation you have. So anyway, just some food for thought there.
Yeah. No, man, at this point, we don't know what's going to happen. This is one of those things that I'm sure at some point is going to get resolved, and when it gets resolved, it'll end up playing into our thesis, going forward. The one thing you can't do is try to predict like what's exactly going to happen. The good thing is you can at least just model that into your risk, where it's like, okay, if this does go long, have a prolonged impact, then how are we going to position ourselves versus, hey, if this gets resolved before tonight at 12, then how do you position yourself? And that's just how the cookie crumbles, right? It's like almost going to like a roulette table sometimes and just saying, you know what, it's either red or black. There's really not much you can do,
Yeah, I think it could be something that backfires, right? I mean, I think somebody said it in the chat, but I think it's honestly kind of true. It's like, well, if this is a risk that people haven't really been thinking about, the owners of these shipyards haven't necessarily been thinking about, now they're worried about it, right? And now they're saying, well, at what point do we actually start to accelerate this in case we continue to have more intermittency with employment, right? People coming, going to different industries to potentially seek higher pay. They might reach a temporary solution, but who knows how long lasting that is. I mean, I've grown up with unions in the past. Like I'm not a teacher personally, but the high school I went to, would always every year or every 18 months, they wouldn't go on strike per se, but they would have demonstrations about like they're walking around the front of the school for half an hour. And it's like, hey, we just got a half hour free of class. But at the same time, it's like, they're battling something. They're always battling something. So in this case, if you have something like this and you have the intermittency, spoiled goods, a bunch of things end up going sour and supply chains get disrupted, it's probably only going to help the case of automation further in the short term, right? Maybe in the long term, things will kind of normalize to an extent. But anyway, just some thoughts there.
Yeah, we'll see what happens, man. For me right now, I think we should just do some general market talk before we head out. So September was supposed to be this correction in the markets. It didn't really correct that much. Like, it's been a strong correction, right? I mean, it's been a strong year so far. Let me rephrase. September has been a strong September. Normally, you're supposed to see like a pullback in September. I wonder if it just kind of got pushed out a little bit. So now instead of like a week end of September, we just see like a week October instead. Do you think that's a possibility?
I think October can be there. I mean, generally speaking, I feel like October is never really that strong anyway. September, October, I feel like are always kind of lull months. November can be very volatile. I feel like I've seen some Novembers, and this could be me not recollecting very well. I feel like I've seen some Novembers that do okay, and that lead obviously into a really strong Santa Claus rally. But most of the time, I feel like Novembers are kind of even, if not slightly up. And then Decembers, generally speaking, are always rather pretty good from my recollection. The only one I can kind of think of that was not good was 2018. I remember 2021 going into 2022 was good. And then obviously January is when shit hit the fan in January 2022. And then we had a really good, basically end of October 2023, all the way pretty much until now, with very minor pullbacks. But it just goes to show, I mean, the market's always on sale somewhere. And to me, I just continually add every single month. You know, every time I get paid every 2 weeks, I continually to add. And if I have the opportunity to consolidate when there's a 5-10% pullback, I just look, I have an eye on what things I want to add to. And so for me, I mean, the only things that I'm really looking at right now is, as we're kind of looking at demand potentially going down for summer and just overall market demand for oil, which is generally historically lower in the winter time frame. Looking for oil prices to kind of go down. I'm curious to see what happens with OPEC Plus. Potentially going to buy back in. I don't necessarily know if I'll go with Shell this time. There's a couple other companies that I think are really good that I might split my money between. They actually have a higher paying dividend, but we'll see with that. I'm not buying it for the dividend per se, but we'll wait for that to continue to kind of pile on. But I think October could be volatile. You never know. I think it all depends on where the market thinks we're headed, what the people think is going to happen with the election results, what happens with September inflation numbers, market macro trends with respect to unemployment, anything that can kind of give an inkling that things are worsening at a faster rate than previously anticipated. Because I feel like during the September conversation, Jay Powell was kind of like, things are worsening, but they're not worse to the point where we're panicking, right? And so they kind of did their 50% initial cut. And I feel like right now, in between where we're at with the 50 basis point cut in November timeframe, we're kind of in no man's land. So I feel like it could really go either way. You're on mute.
I'm focused on China, man. Like I'm not sorry. The U.S. markets are great, but they're fully priced, in my opinion. China's where I want to be. And I think right now, the level of pushback that I'm seeing regarding China seems to make me hit the bull button more harder. Does that sound bad? Like I've seen on Twitter, and I think Twitter is a good barometer for investor sentiment. If you post anything China's stupid. China is a communist country. Like don't invest in China. China bad. China panda. Like it's like the stupidest.
China panda.
You know, it's so bad.
I held it together until China panda. It's really sad. It really is. I mean, it's the propaganda that I think feeds in. You know, I've met so many really intelligent, and it's like if I were to go to China and people were to do the same thing about American, it's like the American government isn't the American people, and the American people aren't the American government, right? I mean, it's the same sort of thing, but we get fed the fact that the Chinese government is one way. At the end of the day, I see Chinese people come here all the time and they're like, well, I shouldn't say, because they might somehow figure out who I'm talking about and destroy their social credit score. But, you know, they're not always in agreement, right? So.
Yeah, man. I personally am long China. So I just want to put that out there. I think China, there's been a nice run up. I think there could be a small pullback here and there while the markets kind of digest some of the data, but it keeps going higher. I think it's going to keep going higher. I think it's a secular bull trend. A lot of the economists, like they're coming on CNBC, they're like, oh no, this is a short term. No, the Chinese, they have the willpower to do what they need to do to get their economy running. You know, they're by no means are the Chinese weak in that respect. And now that they've determined that they're going to basically inflate themselves out of this hole, it's going to happen, man. It's going to happen.
Yeah.
Chris had to do it with a Chinese accent. I grew up in Brooklyn, and so I could do a Chinese accent. I don't know if it might come out a little bit like. So what's your favorite accent, like outside? Like, can you do an Indian accent, Matt?
I'm not very good at accents. I'm really not.
You're not good at accents? Dude, I'm great at accents. I can do an accent. Let's have a conversation. I'll speak like as if I was Chinese. How about that? Like, this is no offense.
You just did.
No, it wasn't. It wasn't that. It wasn't for a prolonged period of time. I'll do it for a prolonged period of time. It's like, so Matt, no, fuck, man. I haven't done it in a while, so I can't really do it like at the drop of a hat anymore. But so I think with the Chinese accent, you usually have to like elongate the end of it, so it's always like, damn it, it's almost like you have to do it in like the moment. So let's have a conversation and see if I could do a Chinese accent. Go ahead.
I mean, I don't necessarily know exactly what you want me to say, but I was
okay. So you're gonna go bullish in China. So what you want to do? You want to buy? Damn it, man! You know what? I lost my accent. I can't do it anymore. I
don't know what that was. I was trying to.
It just has to come out naturally.
That was like a combo, like Chinese Indian accent. That was kind of but
all right, I guess I can't do it.
With respect to oil, man, I keep hearing that people think that it's the time to buy, and I still am just reluctant. I think just looking at the data, right? You are seeing demand weakening. You're seeing oil production supply continuing to go up. If you're already still below $70 a barrel and you have a war in Ukraine, you have a war going on in the Middle East, and you're still below $70 a barrel, if that can't hit you over the head to show you that there is a supply and demand imbalance globally, I don't know what else will. And I think you have yet to see a lot of the demand really wane off for the year because we're just entering October now. So I have a very strong feeling that unless there's some massive conflict, which I think people think, anytime there's a bombing that it's the end of the world, I just don't necessarily see it happening. Saudi Arabia's tired of trying to think that they can get oil back to $90 to $100 a barrel and balance their books. I think a lot of the other players are tired of balancing their books. They're curtailed 3 to 6 million barrels, depending on how you ask. Is that real or is that fake? But regardless, the only reason why Saudi Arabia isn't producing more oil than Russia and the United States is because they recognize that they're the leaders of the cartel, which is OPEC, and they are the ones that are trying to control the price. It's just unfortunate right now. You have a lot of players, Exxon, Chevron, etc., that have really doubled down in the Permian, that have really doubled down in Guyana, that are really cheap, low break even oil fields that basically they can produce lower for longer. And I just don't necessarily think people fully understand that we're on the brink, in my opinion, of an oil downturn.
The comment section is fire. It's like, don't say the R's, just say L's instead of it. So it's like fried rice instead of saying fried rice. Like, that's so fucked. And then all the other people are like racist chronicles. Sorry, guys. Look, every culture has an accent. Okay, we just have to accept it. Like, we're just trying to be fun. Like, look, you want to know some of the Indian accent? I can do the Indian accent. It's like I could talk like, and the funny thing is I know to like an outside culture how ridiculous the Indian accent sounds, especially like if you're dating a girl and you have the Indian accent, bro, it is hard. There's one time I had this college roommate. This dude had like a thick ass Indian accent, but he was like 6 foot something and he was like really good looking dude. So he was able to get away with it. But bro, if you're like me and you try to do the Indian accent, bro, you are going to die single. The Indian accent is the least sexiest accent that's ever been created, right? Like, it's like, hello, baby, how are you doing today? Like, no one is trying to be with that guy, unless you have the same accent, then it's fine. Like, you're not going to notice it, right? So it's like, yes, baby, I love you. You're doing really good. Like, it's going to work out. But if you have like a different accents against each other, it's not sexy, dude. It's not sexy.
Chris trying to get me fired. I can't wait.
You have to do a racist accent now. You have to.
Nah,
come on, man.
Nah,
at least try to do one.
I just know the things that I'm good at, and that it's not a lot of things. I'm not even good at investing in the stock market. So
he's like, I'm too white to do an accent, bro. I can't even stand on that. Like, come on, man. No?
I can't even think of an accent. I will say if I wasn't going to get demonetized for showing some things, I would. The Aries Spears accent, Tony Soprano accent, is absolutely
Yeah.
phenomenal. Have you heard it?
Yeah. I've heard of that.
It's
Yeah.
really good. He does a phenomenal job. Some people are really good at it, man. I'm just not. This is not my.
You know
it's
what?
not my cup.
You know what, June? I disagree. I actually kind of like the German accent. You know, German accent has its like finer points. It's not like totally like, out of this world. Like, what's your least favorite accent, Matt? Say Indian.
I'll tell you my
Go ahead.
favorite accent.
Okay.
Well,
it's
I
French.
think
Everyone says it's French.
No, I was gonna say the Scottish. I for some reason, man, the Scottish accent on men or women, I think is my favorite for sure.
Really?
Yeah, maybe I'm just rizzed up by a good old Scottish story. I work with a lot of Scottish engineers, man, and they crack me the hell up. They're really good storytellers, but also I think the Scottish women accent.
You think the Scottish accent?
Yeah.
I like, believe it or not, I like an Irish accent. The Irish accent. Yeah. Like, especially like when it comes from a girl, like when they say it, it sounds, I don't know why, it just seems attractive to me. I like Irish accents, So
yeah, Craig Ferguson gets all the ladies when he goes on the late night. So yeah, I'm a fan.
June's like the Australian accent. Nah, dude, Australian accent's horrible, man. It's like, let's go down to the Barbie, and let's invent words that are stupid, but they sound Australian. Like, I don't know. That's a terrible accent, but yeah, that one's not good. Yeah. Let's see. So what's everyone put in the comment section? What is your favorite accent from around the world? And it could be an English accent also that's just, more localized to like a region of the United States.
Yeah,
or around the
that's
world.
fine.
But what's your favorite accent? Like, where basically you have a non-native, or let's say even native speaker, like let's say an accent that translates, in English and how that sounds, Texas, the Texas accent. I mean, you grew up in Pennsylvania, so you don't have a Texas accent.
No, I don't. I mean, I say water, bagel, things that people think sound weird when I say water. Yeah.
That was like a Liverpool. That was like a Liverpool accent or something.
What, water?
Like no. The thing that I said, like the Australian one, it was more like Liverpool. Yeah.
Irish and their songs. Okay. Jamaican's a good accent. I like Jamaican. I like the
Jamaican accent too, brother. The Jamaican accent is the best one by far.
When I lived in Trinidad has a very sing-song accent, so it's like very much like up and down. So I didn't mind that. I like that a lot. But there were some Trinidadians that did like their accent annoyed me. But I would say majority of the time they were fine. I like the sing-song accent because I felt like I was kind of getting sing to. I would intentionally, I shouldn't say this might actually get me fired. I would intentionally try to be reprimanded by certain people just so I could hear their accent.
Really?
Yeah.
It's like, what are you doing, Marty Bumbleclad? Get the goddamn oil. That's Jamaican. That's not Trinidad. That's Jamaican. Damn rascal coming to Trinidad looking for that oxtail. You get out of here, white man. Always come here, take our oil.
I'd say you should start a podcast strictly with accents. You might be onto something.
I try to do some funny ones. Like Russian is another one. Like it's like, hello, mate. What are you doing? Do you want to go and get some oil with me? Like, where should we drill for the oil? Is there oil in Texas, Matt?
The Russian accent sometimes sounds fake to me. Like it sounds too. You're making
the fun of Mother Russia. It's no good. No good, Matt. You go back to America where you belong. Okay. Is that Ukrainian or Polish? I don't know.
I have no idea.
Basically, it's the region. That's and it's more like enunciated from like TVs, which I know it's like fake as fuck. So yeah.
Yeah. Well, yeah, I did it for a female boss because I wanted her to yell at me in Trinidadian. So,
do Mexican? There's a Mexican accent. What's a Mexican accent? I don't know. I'm around too many Mexicans to ever like literally notice their accent.
I don't know. When it said do Mexican, I was thinking of next Friday when they have like they're walking around saying homes and stuff like that.
Orale ese, what are you doing, man? Let's go get, I can't see. This is the thing. I do so many stupid accents. They all kind of get mixed up and jumbled. So it doesn't work, man. I used to get cursed out in Gujarati all the time. Dude, I'll tell you right now, I can curse you out in Gujarati if you want. Let me know. I speak like my wife comes from the southern part of like Gujarat, which is a state in India. Bro, their entire language is based on cursing. Like
Really?
it's just curse words. Gujarati, I'm from like northern part of Gujarat, which is a little bit more like, like we actually speak normally, right? But then you come from like the Surti people, that's where it comes from Surat. They start off like their greeting is like, oh, like they just start off with cursing, and the entire time that they're talking, they're just cursing the entire time, and it's like not like little things, it's like really fucked up things, but they do it in a way that it's like it's so ingrained into their language that like anyone from the north would be like, oh dude, what the hell, man, you don't be saying that, but when you're in the south, it's just kind of how they greet each other a little bit. So I'm sure anyone who's Gujarati in the chat, they'll be able to tell you.
I know I have a couple friends that are from Maharashtra, and they say that like the word bullshit is very common. Like it's not really a bad word. They just say like it's commonplace almost that the word like the Indian word for bullshit is kind of used all the time. So I don't know how real that is, or if that's just their friend group or what, but
yeah. It's I don't know, man. You have to with accents, or some people actually go like with especially if you're like in Hollywood, like there's acting coaches, that not accent coaches that can teach you how to do an accent, and it's funny because a lot of actors, they're actually British and Australian, and then when they speak like with an American accent. And the thing is, for us, it's like it's not an accent, this is just how we normally talk, but there's an American accent to it also, so to us, the British accent is the foreign one, and to them, the American accent is the foreign one. So,
yeah, demand is real down on baby oil. So maybe we should load up on
short
J&J.
Johnson. I was gonna say we should short J&J, bro. Their number one consumer is basically behind the bar.
Anyway, all right. Well, I appreciate 147 of you stopping out, Mr. Patel. Anything to say? Make sure you guys turn on the notification little bell below next to the Cashflow Chronicles name. Subscribe if you haven't already, so you can partake in the chat. Mr. Patel, anything to say before we sign off?
No. If you're a longshoreman, you watch us, by all means, please reach out. We'd love to have you on. I'd love to just ask you a couple of questions.
I'm severely ignorant when it comes to that sort of thing, so I apologize if I offended anybody with respect to that, because I just don't know, right? I haven't been exposed to that. I mean,
I've come to the conclusion that half of what I see on the news and on social media is going to be like completely fake, right? So I want to believe a lot of the stuff that's being said, but I'd rather hear from people now. So I'm a lot more skeptical of what I hear. So when I hear someone who is like a longshoreman, and they can probably give you a much more accurate representation of what's actually happening on the ground, why they're fighting for what they're fighting for, what the benefits that they're trying to get are. I think what happens is when you hear someone who's actually in the industry, they're a lot more reasonable. I'm sure that there are certain changes in your field that you would want to see. Same thing with me in my field, where I would want to see certain changes because of, just how things are. And unless you work in that industry, it's not going to be very obvious. And you basically have to trust just like a news source who used to be a lot more like fair and balanced, now be a lot more like, just depending on which news agency you talk to, can be very like biased towards either thing, and especially a political bias during an election year. It's probably even worse
during an election year. I mean, if they were talking about the oil industry, they would try to fit in things about Greenpeace and this and that. It's like, well, we're here to be talking about particularly the oil industry workers, not necessarily if you should be pro or against oil jobs, right? We're talking about the workers themselves. And same thing with this particular case with respect to unions. It's going to get politicized whether you're for unions or against unions. And it's like, well, that's not really the topic in hand. The topic in hand is, what do you think? Is it appropriate for these particular individuals to get paid more, less, etc.? And hear the actual topic at hand. But instead, like you stated, I'm sure it's going to be a topic of tomorrow's debate of what do you think is right or wrong for specifically unions in general, longshoremen in general. Really, just what do you think about unions? And I'm sure that that's going to be a topic of discussion tomorrow, unless we hear a swift sort of transition back to work for a lot of these folks. So I don't know.
Yeah. What are you hoping for? Are you hoping for a strike or the opposite?
Honestly, I'm not educated enough to really be able to give an opinion, man. I mean, I don't necessarily. I don't know. I'm always kind of against just raising the minimum wage for certain things just because. I think if there's a need for it, I would understand. But for example, like I don't necessarily believe that the minimum wage in California should be moved to $20. Like it just doesn't make sense because now literally everything else is getting more expensive. And it just means that you value my work that much less. Like I just got pretty much like a $7 to $10 an hour pay cut, right? So in that respect, it just doesn't make sense. Like people are like, oh, but now prices for things in California are through the roof. And it's like, well, what did you expect, right? Like just because you might get a temporary relief for 18 months, 24 months, but everything eventually gets passed on to the rest of the consumers. So really nobody benefits when you do those things. Like to me, I think what I will say about this entirety, when I was, I guess, when did I start working? 2004, 2005 is when I kind of entered the workforce. That was when I was 14 years old. And the minimum wage was $7.25. It's still $7.25. I think that that's a crime. I think that, and whether or not that means it should be, $20 today, I guess is a different story. And I need to do more work on that. But I'm a firm believer that it probably should, in a retrofit case, be just like a cost of living adjustment at a normal office. It should also face some sort of cost of living adjustment.
But Matt, just remember, it's $7.25 at the federal level. Localities determine their own stuff, right? So if you look at certain areas of the country, they have different minimum wages, right? So I think what it is,
but I think a lot of people still
that
operate off the federal.
I don't necessarily think so. I think there's the market roots out enough inefficiencies where they'll basically say, you know what, if they can't find workers at $7.25, they'll bump it up to $8 to $9 to $10 to $20. I think I like regions basing their minimum wage based on their personal needs rather than trying to do just a mass like number. Right, where certain localities may not be able to afford that, So
yeah.
All right, let's end this though, man. We're getting tired. I'm getting tired too. I see you're falling asleep. So
no, I am. Yeah, a little tired, but yeah, just wanted to flash this up. The blue is where the minimum wage is, like you stated. I guess places where they're able to find workers for that, and then $15 in New York, and then 16 in California, and this is as of July, so a couple months back. So. Just wanted to flash that up really quick. All right. Thank you for the 132 that stuck around, Mr. Patel. As always, a great time. I sprung it on you. So thank you for showing up. And we'll talk later this week to figure out when the next episode is.
Sounds good. Later.
Thanks all.
Take care, everyone.